All right, what's going on, everybody? Chris Franks with Texas West Capital. And, of course, I've got the man, the myth, the legend, the guy that all the guys strive to be, the guy that all the ladies would love to be holding their hands, right? Your wife isn't listening, is she?
I sure as hell not, I hope not.
We got Freeman Swati here. Look at how red his face got all of a sudden. Look at that.
That was pretty funny, dude. That was pretty good.
Hopefully everybody's doing all right. We finally were able to get Phil on here. And, again, he had wanted to be back here last week. He'd planned to and then got sick and decided that, you know what, being sick just does not work well with being live. So,
yeah,
here we are.
Nuts. A lot of people getting sick these days, man. It's going around.
It's just crazy, man. But I mean, we say that every year, right? I mean, let's be
honest. It's the time of year.
Oh man! So hey, listen, big stuff with Bitcoin, right? So some of the things I was talking about with Fibbo here right before we launched up, got going here, was that the Bitcoin ETF inflows have been huge this week, guys. I mean, IBIT alone has had over $1 billion in inflows. And so we had 2 days where we had over 700 million. So yesterday we had over 800 million. The day before we had over 700 million in inflows across all the Bitcoin ETFs. Why is this important? Because now that it's an institutional product, guys, watch the inflows. They'll give you a lot of directional bias as far as what's going on with price. Other than that, I've been posting, if you guys are following me on X, I've been posting about how miners are taking off this morning. And they've been doing this week, quite a few times this week. So miner interest is heavy. We're getting a lot of upside on that, which, again, that's not directly Bitcoin. A lot of those miners are doing what I talked about them doing, a few years back, which is kind of getting into this whole AI thing as well, data center stuff. But nonetheless, we've got Bitcoin miners catching a bid. We've got Bitcoin, who recently pushed up near 99,000. And then we have the ETF inflows. Now, the only other thing that I'm going to say here is that right now dealers are they're short calls. There's a call wall there around 100,000. And so as I posted on Twitter X or whatever a couple of days ago, I said, as you get to that 97.5 area, you're going to start getting more pressure. They're going to start trying to hedge that position, to keep, because they've been trying to keep it pinned between 80 to 90,000, which is where the put wall sits, and then 100,000, which is where the call wall sits. But here's the thing. They are negative gamma right now, which means any move that price does is going to be more exaggerated, which means if you can get a breakout above that kind of 100,000 area and you can get acceptance there, then the odds are extremely high that you're going to see dealers start buying. They're going to have to start buying. They're going to have to play catch up. And that's just that auto-filling thing, right? So they have to buy, right? This is not pullbacks, is whatever. This is the math says they have to buy. And then that causes price to go up higher. And then they buy more, and then price goes up higher. And that's where you get a gamma squeeze. Now, I'm not saying that's going to definitely happen, but I'm saying if we break above 100,000 and we get price acceptance there, that's the most likely result. And so I set this all up because Fibbo's going to talk here in a minute about the level that he wants to see on the weekly that's reclaimed to really signal that the low is probably in. And the way we get there, most likely, is that kind of gamma squeeze up from 100 up a bit higher there. So we've got the setup in there. We'll see if it happens. Are you guys excited about this? Have you guys been thinking about it? Is it permeating your dreams, or are you just thinking about Fibbo?
Gamma squeeze. I'm ready for a gamma squeeze. I'll take a short squeeze, gamma squeeze. I'll squeeze them any way I can get them.
So we've got that. Alts have been looking pretty good here, right, man? So, I mean, you and I both, we kind of track some alts and watch that there. And I know we've had some great trades that I put out on the market wrap. Real quick, as well as I've got that paid version of the market breakdown, which every Saturday we give 5 crypto setups and 5 alt setups. 5 equity setups, stock setups. Starting Saturday, tomorrow evening, because that's when it goes out, I will also be posting those trades in the Traders Club area in my section there for our liquidity cartography group. So
nice.
You're going to get that now. You get the updates every evening where I look at different alts and different stocks as well. Market wraps Monday through Friday. So a lot of opportunity if you guys aren't in there. And by the way, that's just me. I'm not even talking about Fibbo yet. Because if you join the Liquidity Cartography group, you get access to all Fibbo's stuff. You learn how his threshold theory works. He updates you throughout the day. And, he does it more than me. He does the weekend as well. He'll show up on the weekends. I'm usually off on the weekends trying to do some family time. But Phil will show up and he'll let you know if you're hitting the next way where you should be adding or whether you should be taken away and all that fun stuff. So, but you can do it right now, guys. If you jump over to members.texaswestcapital.com, go to the monthly subscription for the Liquidity Cartography group. You can get 55% off. This is a limited time. I'm not going to tell you when it's over. I'm just going to pull it, and you're going to lose your opportunity there. But you can get that monthly for 55% off. So you get everything I do. You're going to learn how and why liquidity forms in markets, how to identify it, how to trade it, how to approach the markets, proper risk management, all that stuff. Plus, I do live trading 3 days a week in the mornings, Monday, Tuesday, and Thursday. I also do 3 live training sessions on Monday, Wednesday, and Thursday. You get access to all that. And on top of that, as if that isn't enough, you get the king, Fibbo Swabi. Fibbo Swabi, I did say Swabi. Swami there.
So many people say that. It's hilarious.
It's my first time. It's my first time saying it. But anyway,
sorry.
You get all that, guys. Listen, here at the end of the day, you're getting almost 60 years of market experience here. We're not just crypto bros that just started yesterday, haven't seen a real market or a regime change, anything like that. We're guys that have been through this multiple markets.
I'm going on 28 years now. So I know you got a little bit more than me, but I'm at 28
Just barely,
years.
man. This is my 31st year. So
yeah.
Basically getting up there 59 years, guys. I mean, it's crazy that you get that kind of experience for that inexpensiveness. But, we're looking for serious people. If you guys are serious, we'd love to have you in. We'll bend over backward to help you and get you to understand. And I just want to make sure we point that out there because I don't think people really understand just what we do there and what you get there. I honestly don't think there's a better place for you guys to learn anywhere online that I've come up with yet because I always add more to compete with them. So there we go. Anyway.
Love it. Love it. You just talked on exactly why I joined up with you a couple of years ago because I looked all around and I only like to follow people that actually know what they're doing and offer good advice and good risk management and that's the route to go. I mean, and again, like if we don't fit what you are, then find somebody that does. But
you have to. Everything
that's offered, I'd be surprised if there's not something that you can grow from within what we do.
Exactly. From intraday scalping trading to swing trading to investing, just understanding how the market really flows. And you get a lot of that from us. Here's the best part about it. Fibbo and I both approach the markets a little bit differently, but we come from the same beginning. We both come from that basic understanding that price leads, narratives follow. And price is the result of oh man, I just lost my train of thought there. Social mood.
Social mood, baby.
Yeah. The idea that as a whole, retail traders, investors, institutions, corporations and whatever, how they're feeling about the market, they show you in how they're buying and or selling. And that's the quickest, fastest way you can understand that. Narratives always follow afterwards. So
hence my tagline.
What'd you get there? No narratives, just levels. Love it. That's right. Exactly. So yeah, again, guys, real market experience, real market education. And I'll tell you what, we both got great groups of people. I love the people that are in TWC. You'll find out there's a core group of traders in both our sides there. And man, they're just all about just wanting to learn and wanting to trade and wanting to get with other people that do the same thing. So I think it's probably one of our best things we got going for us. What do you think, Fibbo?
Oh, absolutely. I mean, that's one of the things I love about it, to be honest. It's good to talk with people that are enjoying themselves and learning at the same time.
Yeah, Yeah, exactly. Rather than, the social media narrative, which flips every other day and everybody's like extremes of emotions, right? So
Yeah, it's gotten so bad.
it
I like
is.
it better when like 2017, 2018 on Twitter was probably so much better because a lot of people were in the dark and everyone was learning together, and then everything just exploded into I don't know what. It just got ugly.
It's crazy, right?
Yeah.
Well, I guess we can go ahead and, we've come out here, we've let them know, and we don't really talk a lot about it and what we do there and whatever. So I think that was a good thing to kind of get up here. But
No, absolutely.
yeah, let's go ahead. Let's go ahead and jump into charts, man. Let's see.
All right, let's do it.
I guess I got to add you there, right? You can't add it.
Yeah, there
Let me
you
kind
go.
of pull us down there so they can get a bigger chart.
There we go. Yeah, I'm gonna start out with BTC. I got a few time frames. I just want to kind of, show what I'm looking at, what I've been looking at, and been waiting like everyone else. But I mean that's a learning skill is patience, and it's not easy.
Yeah.
Especially when we're in this range bound market going back and forth. It's going to tempt you a lot going different directions. But sometimes you just got to stick to your guns and hopefully it works out in the end, right? Start out with 4 hour. Couple of things I'm watching on levels here. We went into the bull zone at this point right here. So you'd be buying on this break right here into the bull zone. So if you bought into the bull zone, it's probably right around 94 or so, 94 and a half. Plus we already had a couple other buys from down below to average out a little bit. So we're just adding and pressing to our position because I'll show you a lot of support that held, and that's why we kept our positions on when we were buying down in these levels. But we've added, and now I can't remember. I've traded so much. Let me see where I'm at here. Yeah, I'm at 30% long on BTC at a 95, 193 average.
That's on the 4 hour. You're that, right?
Yeah, just on the 4 hour. And we've traded a couple of times too, but that's what's remaining at the moment. So I got the 95,000 basically average, and I'm risking to about 93.2 if it got back down into the bear zone. So if it hits the bear zone and you get out, then we'll take a little bit of a loss. But we had a couple of trades in there that would kind of offset that. But the good thing is we're back into the bull zone. But a couple of things that I saw on the chart that I kind of like. If you look at these highs right here, and I'll just kind of put this as a kind of a straight line across here.
Yeah.
If you take, a lot of times you'll see me taking the missed the bottom there. Taking trend line. This is a horizontal, so it works just the same. Yep. If you take the furthest point underneath to basically I'm roughing it in there, but if you clone that and take that same distance, it works out to come out really nicely at this target that I have at 104.7. When you go back in history, that was actually the start of, it was a threshold area right here. So that matching up with the breakout right here, and some people might be calling this like a cup and handle or those kind of things. I don't really think that's kind of the case, but I guess it could be maybe. To where you're down here and you break out and you come back and retest right at the support of where we're at the moment. So this support in here, while we're still holding bull zone, is going to be hopefully a spot where buying interest comes back into the market and moves us up towards some of these targets. Now, one target I do have, which was from another threshold, which is inside this fib extension level, comes from this 96,559 level. And that comes from, I don't have it all in here, but if you put the fib from this move down here, what I do is I keep moving my fibs up, and then this target hit, and then you got this level right here. Then you go back in history and maintain that structure because that target already hit. And that's kind of where I was talking about, like buying down in here and taking some profit at these targets. That's already happened, so we've made a little money from there. But now we're just kind of setting up to make some more. So that's where this number comes from. So when you take the fib extension, the 127 to 141 range that I like to use, that threshold's in the middle of that, and that's where that target comes from as my next take profit level off of the 30% that I have, and that's why I have these 3 levels to be taking profit on the way up. So that's where that one comes from. And then of course, if this gets up to that, if we get up above and hit this target, and we get 3 settlements above the 103.1 right here, then the 112.5 would come into play with a much higher probability of hitting. So that's where these levels kind of come in as we're in the bull zone. Even though we're correcting back, we're still in the bull zone. And the other thing I like to look for is a look at the ADX. So as the price is dropping here for the bears, yes, the red negative directional index will increase because it's freaking math. But the other part is that the ADX that measures all of this and gives you that trend strength. As the price is coming down, the ADX isn't building any strength. It's not increasing, it's actually decreasing. So decreasing on the price movement to the downside into support should find buying interest. Now, it's not a guarantee, but we're getting into a spot where buyers should start to come back into the market.
Yeah.
So that's the 4 hour. So that's a good thing. That's step 1. Step 2 was going on to the daily, which this is the first level that I was watching for to as I was talking with Chris offline, have different check boxes. I've gotten all the boxes checked except one, and I'll show you that one on the weekly. But on the daily, the first one I was looking for was, yes, we went into the bull zone, which was great, but it wasn't a buy yet. I did have a buy down low here at 85,850, and I'll show you why that was important on the weekly. Basically the way it works, if you go into the bull zone, you have to have 3 consecutive settlements above the previous shallow fib. So as this bear zone here, the shallow fib there is going to be resistance. As you can see right at that point, it held resistance, came back down. Now we broke above it and had 3 settles above that level, which now makes that 38.2% level support, which is coming in pretty nicely at the shallow fib also, right around that 93 to 94.2 range in there. Is where this should hold as the shallow fib, and then of course we're in the bull zone and have some movement there. So that was step 1. But step 1 on a daily for doing this brings in a full retracement off of that previous bear zone here. So as we move down to the downside, this 100% level at 113.4 is the target for the break of this area here. Now, of course, this all goes to shit if it goes back to the bear zone, but everything structurally is looking really good. Now, if you want, you can take an early sell in here at 108 at 108.66. That is a target that if you want to do some take profit on an earlier stage, you could definitely use that as an area. But basically, it comes with experience. The more times I've seen this type of setup, the probability to go to a full retracement, even though we haven't got the 61.8% level yet, it kind of takes into consideration some other types of patterns in different time frames. But yes, you can definitely take some profit there if you need some cash flow. But then the 113.4 is what I'm going to be looking for later on. And then of course the fib extension levels on that come in. I'm kind of taking this high in this little order block here at the top, and then that will be my next target at 124. So this is the first sign of the check boxes that I like to see. Or there's other ones, but that was the second to the last one. There
you go.
But I'm liking it because it does raise the probability that the sentiment is changing to buy into dips instead of selling into rallies. And that's what I like to. That's what I'm trying to maintain. There is that structure, and so far it's happening. So that's what's happening on the daily. So everything looking good there. Now, as we go on into the weekly, this one's working pretty well, and this is where I was getting a lot of heat for a while. I'm like, I can't believe you're buying 85 when it's going to 60, and I'm like, well, I don't know, we'll see. And of course it still can, because it's still not out of the weeds yet, because we are in the bear zone. on the weekly. However, when you take the threshold theory program that I've put together for myself, when you went into the bull zone here and you look at the fibs, the 38.2% level is that previous shallow fib. Just like you do on any other time frame, when it goes into the bear zone, you have to have 3 settles underneath this level to actually trigger the sell. So even though it went into the bear zone and actually gained a lot of bearish momentum too, not a lot, but decent enough to where we slammed down into this area, but we found buying interest many times along this level, and that's where that buy on the daily came from, and the 4 hour. I bought both of them on this because I don't trade the weekly. I use it as a guide. So as this came down to a support, I added longs on the 4 hour bucket and the daily bucket, and that's where that 85. When I looked over here, this 85,850. We've already traded out and made some profit off of the 4 hour one, but the daily one's still in play, and we've had a couple more added to it to where I have an average of 91,940 now at a 30% long. And that has a lot to do with the daily or the weekly holding support here. And that's where I marked target hit. And then we started working our way back to the upside. Now, the last box I need checked is going into the bull zone on the weekly. So if we get the weekly up to the 108,845, that will be that last signal that the 80K is the low. And we're going to be starting into another nice run to the upside. So we're not quite there yet, but all the other boxes that are being checked, the structure that's being formed, the stuff that Chris was just talking about earlier with the inflows and a lot of other things that are happening behind the scenes. I like the way the structure is keeping this bullish structure, even though we corrected back and everybody was, for some reason, this 35 or whatever percent correction,
36%, yeah.
Really freaked everybody out when we've already had like 2 or 3 other ones. I don't understand why everybody was so out.
I think what it was,
money.
Yeah, I think what it was that whole 4-year cycle thing, right? So October, you hit that high, and then everybody's like, "Oh, well, we expect it to go down." That's the only thing I can think of, because otherwise, it's a muted pullback like we normally have, right? Or what we had this last
I get that. For me, I wrote off the 4-year cycle when we had a high before the halving. I mean, once we had that, I wrote that whole narrative off. Yeah, I'm kind of tired of hearing about it, to be honest. But I mean, can it still be there? Yes, because the weekly is not back into the bull zone yet, so I'm not 100% ready for the launch. So I'm cautiously optimistic. Definitely going long and putting some money out there, but I would really like to see the 108.8. And this number changes as the price moves around, but it's going to be right around that 108, 109 area by the time it gets there, and hopefully it gets there pretty soon.
And what I want people to pay attention to here is what you're saying, right? Because a lot of times, when people are first starting to come into the markets, they don't understand what they're doing, whatever. They get very definitive, right? Like, oh, it's definitely doing this, and definitely do that. And we see a lot of that nonsense in social media, which I think really, is what rubs you and me the wrong way so much.
Yeah.
But you do the same thing I do, which is we say, listen, here's our opinion. Here's what we think may be doing. But take the opinion with a grain of salt, right? Here's what we're actually looking for to happen on the chart to increase the idea that we're probably right or we're probably wrong. And that it's all about managing your risk. It's all about that risk management, right?
Oh, absolutely. Yeah, absolutely.
Yeah. So
I mean, that's number one, regardless. And really, if you have a strategy and a plan in place, like I do with what I do with my threshold theory, it's already kind of built in risk management, because I have the levels that tell me to get out, and I have the levels that tell me to take profit. And the thing is when it goes to those points, do what it says to do, because historically, based on back testing and also experience, that once it hits, do what it says. If it says take profit, take profit. And if you make 8% and it goes to 20%, oh well, there'll be another day. So you just kind of. I know it sounds easy when I say it, because when you take an 8% profit and it goes to 20%, you're like, damn, I could add another 12%. It happens. I mean, but The good thing is you got 8%. I mean,
Right.
and that adds on to your equity. And the next time you go to buy, you're going to be buying more because
Bigger position
if you do
size.
it exactly. It's all about, yeah, exactly. So
time and compounding, folks. Look, I say it all the time. Fibbo's sitting here reiterating it. All you have to do is lock in profits consistently. It doesn't mean every time, but it means lock in profits. It doesn't say buy the lowest price and sell the highest price or get the entire run. It just says lock in profits. And like Fibbo just said, if you do that over time, the compounding is going to get you where you want to get as far as your capital account goes.
Yeah, no, I totally agree. Not an easy thing. I mean, it takes a while to. I think it's an age thing. I've gotten a lot more patient in the markets over the year, at least the last 10 years.
Yeah.
Just so much more patient. And I really just don't care anymore. I'm just like, I'm just going to take profit where it says and get out when it says. And I might take my 2, 3, maybe even 5% losses sometimes. Don't typically get too many big drawdowns because I don't use a lot of leverage. So if I get out, take the lickings and move on. But if you play it right and you follow those trends, you're going to get 20 to 30% wins that are going to offset those little losses. Now you might not get them all the time, but if you get the 4% and the 8% and the 6% and you just keep adding them up, they add up over time. So just keep sticking to what you're doing. And that is a big thing when you go back. I lost the screen there for a second. Hopefully it pops back. When you look back, I lost my train of thought. Never mind. You get what we're saying. All right, well, let's move on. I mean, and this correction was definitely kind of scary, of course, because when the weekly goes into the bear zone, it does kind of freak you out a little bit. But I had to stick to my plan and saying, hey, this level historically has worked really well on the previous shallow fibs. If it holds, we should be looking pretty good. So hopefully we're headed to new highs, new all-time highs later on this year. Now, let's go on to a couple little further out. If you want to go out to the monthly went into the bull zone here. And of course, I don't trade the monthly by any means. And I don't put like a ton of faith in this either, but it's the setup's looking pretty good. Where did all my stuff just go?
Oh,
that was
you have an issue?
I think so. Let me no. That was
I'm
really
scared
good.
to hit refresh on mine to tell you.
Yeah, that's still there. That's still there. Yeah, let me hit refresh. We'll see what happens.
Fingers crossed. There it is.
There we go. That was weird. Everything just went away.
Well, I got worried because, X was out earlier today with the Cloudflare issues or whatever. And I'm like, man, what's going on?
Crazy. All right. Well, from a monthly perspective, we went into the bull zone back here. And as you can see, we've been in the bull zone ever since. Still has not crossed. The green positive directional index is still above the red. As the support under here is being held. So the bull zone is still in play. The shallow fib is still being held at 88.142. Still definitely traded underneath of it a couple of times, but definitely holding. The target hit earlier. The 122 was the 200% on that. And if you take the fib extension level in here, that was kind of a level to be watching too. So when you look at this, when you do that, it broke out, had 3 settles above, and then held it as support without 3 settles below. And then we went off and hit the target at the 200%. And of course, it went to 126, which is fine. And this is the same kind of thing I was talking about. Taking profit at 122 is great. If it went to 126, who cares? You took profit at 122. You know what I mean? That kind of thing. So work your way down. Support's hitting there. So don't mind this. This is just stuff I was looking at. But I guess if it made a new high, I guess you would probably look at something along these lines. You'd have 138 to 145 range, and then possibly a 171 after that, if it wants to start cranking back to the upside there. But what I'm just showing you is the structure and the long-term structure. Even though the weekly went into the bear zone for a little bit, you can go into the bear zone and still go sideways. It's sort of like breaking a trend line. Sometimes trend lines break, but if there's not a lot of momentum behind it or enough push or enough pressure, a break of a trend line to the downside can do two things. It could go really bearish, or it could just go into a range. And that's kind of what's happened here on a little bit more of a macro scale. Is kind of went into a range and instead of going, too crazy. So what I like to do is sometimes I'll inverse it, and I looked at the inverse here, and I put these little half circles, little semicircles here to show where it was basically from the start here. The semicircles are showing where the lows are on each low. So you're getting all these lower lows on the way down. So if you take that same pattern, the next one is in July. So sometime in July, we should be above 126. Where that number will be, don't know. I have targets at 181. I got targets at 209. I got targets at 230. So I don't know where it's going to be, but I would like to see it above 126 by July. I think we'll get above 126 before that, and we'll get much higher pricing beyond that point, because if the structure holds and that weekly gets back into the bull zone, get above 108, 109, get that last box checked for me, 80K's in, and the next bull run is going to be in play. So that's what I'm kind of looking for there. So that's BTC. Any questions, comments, concerns on BTC before we move on?
I like it, man. I like what you're saying. You got those bigger targets are up there, kind of what I'm looking at as well. If the low is in here, so we'll see if we can do it. We'll see if we can get that move up.
All right, sounds good. But again, risk management. If it starts to break down, you know what to do. Get out where it says to get out. All right, let's. I got Ethereum on here. I brought that one up because we went back into the bull zone here. We went into the bull zone, and as you can see, well, you can't see because I took the feds out of there, but once we went into the bull zone, you're buying in here, and it was already above the 38.2% level because we were in this flat little area down here. So you bought, and then the 200% target of 34.02 was hit pretty nicely. So we bought, hit the 200% target, took profit, and then it dropped back down, and then we're buying at the shallow fib, which we bought. Yes, we're underwater a little bit at this point in time, but we're also still in the bull zone. So we're just kind of playing this as and moving on out to the next target. And that's where this kind of comes into play here, finding a good spot historically to get where the extensions are. And then I got a target at 35.82. So the buy at this point is where that's going to play as we're in the bull zone here. So we'll definitely need some momentum to get us going, but that's where that next spot is. And that's where this kind of comes from I took a spot back here on a threshold that hit. I always like to look back and see if there's a threshold that hit inside the zone that I'm looking at to take profit. So to me, that's going to be a spot where a lot of action was happening. So that's where that target comes from. Then, of course, if it wants to get all gangbusters on us, the 200% will be up there for the next one. So I'm only long the 10% because I took a buy, took a sell, and then I took a buy. So I'm just waiting for the next sell on the upside there. So, and then of course we're risking to 32.03. So if it gets down into the bear zone and has those three settles underneath this shallow fib, which would become the previous shallow fib since we're going to go into a new zone if it happens, that's where I'll take that small loss and go on from there. Hopefully not. Hopefully it get some buying interest, start taking us to the upside. And given that, going on to ETH on the daily, another thing that happened here. Oh, that one thing on the daily here that hit the three settles on its daily here on BTC. Same thing happened on the daily on ETH. Now it was very close because I needed that third settle above 32.9883, and that third settle was 33.17. So we got it by just a little bit. So that was a buy. So now that you bought there, and if you didn't, given that it was in the bull zone and we had the three settles now above the 38.2% level because it didn't happen here, you could buy right there at the shallow fib at 32.95. So either way, you're back long in on the daily with the target at the 61.8% level here at 37.18. Again, if you want to use this early one, you can. But when you do this on a daily, most of the time your target up there at the full retracement based on this pattern will come into play. And I don't know where this is, but the target.
I was just about to ask if you did your arrow thing here.
Yeah, I think it pushes it up pretty good. I haven't done it, but I'd like to see where it's at. So the break point, yeah, it pushes us up above that, and that's where this kind of comes into play instead of this one. But then again, it's all about your risk management and what you have set up. If it makes sense to take profit here and get some more cash flow, that is definitely a target that you can take. But you could also be waiting and be a little bit more aggressive and get up to that point. Again, it comes down to the individual and their risk tolerance and their program. So that's where we're at. And then if it wants to get up to that point, the previous high here is inside the zone. So that's going to be a spot to look for. And then the 200% if it wants to get on a nice bull run going the other direction. And then, of course, I mean, this isn't the best trend line in the world, but there is this one too.
That's nice.
If it gets up to that point, but we'd have to get back up above that 100% for that one to happen, but we'll see. That's where we're at on ETH. I just wanted to bring that up since it actually clicked into the zone here, and then we got that 3 settles. So I'm back in the action on ETH. Don't know if that's like a precursor to alts or not, but maybe it's an early sign that we're heading back higher on some of the alts.
Well, I do like a lot of the alt setups right now. I do like them. Again, we've made good money here the last couple of weeks on multiple, alt trades, XMR, Dash. Dash we did the day before that thing took off. So, nice. I mean, yeah, I like the setups that are coming there. They're not overly clean just yet, but, again, ETH's kind of pushing up there, and I like the setup. So I think there's a lot of possibility coming up.
Yeah, I like XMR too. I was just looking at that. It actually went into the bull zone here and actually hit our 200% target.
Nice.
Right here, and then it's selling back off. I'm going to rebuy at the shallow fib is where we're at the moment. Or if we get 3 settlements above this 739, then we're going to be looking at higher pricing. Not necessarily the 300%. I would look for overlap on some other things on this one, but
what is that price up there you were pointing at?
994.
994. Oh man, yeah.
Yeah. No, it would be nice for sure.
Yeah.
But target hit, which is a good thing. See, work our way back down to shallow fib and hopefully buy and then go up to the 900s. I think it would probably be something relatively close to that. I'd have to do some analysis because we're in price discovery, I would believe. Yeah, I don't think we've ever been higher on that. So that would be something I'll have to kind of look into. And actually, I can move that up a little bit. Shallow fib's a little higher. There we go. But I like XMR that you brought it up. I'll get rid of that. Let's go on to gold. Gold's pretty nice. Gold's been pretty fun.
Yeah.
Bull zone went up, hit our first target right here. And this is one of those scenarios that we're in the bull zone. It hit our target, but then it kept going, that kind of thing. But it's the kind of thing, once you hit this target, you do a couple of things. At the time, the shallow fib would have been down here at 45, 48, which of course didn't even come close. But then again, if you get the 3 settlements above this level, without it retracing back down to the shallow fib, which would be 1, 2, 3, you'd be buying it again right here. Then you'd be back long again and playing the market. And then it just dropped. I actually got another buy in here today on the limit on the shallow fib because of this wick down right here. We got back long again. So we're back long and back in the money on gold there. But the buy on this one, the target's up here at the 200% at 46.95. So we'll have to kind of see how that plays out. But again, if you're in it, the risk is the bear zone. So if it gets in the bear zone, then that's when you kind of want to call it quits, that kind of thing.
Yeah. But I like that sweep though on that last candle. I like that large lower wick.
Yeah, that's a good sign. There's a lot of buying interest underneath the market. So, that's a nice, good sign right here. Unless, of course, it just keeps going. But
Yeah.
but so far,
So far, it looks nice.
no, but there's a lot of. I mean, that goes to show you that a lot of people want to buy this market, and they're afraid to buy it up here, which makes sense. But when this dips down into some of these areas, and I always keep an eye on this. When you pull this out, once this breaks, this right here becomes a pretty key level of support. Now, 3 settles underneath this would be ugly, but then we'd already probably be in the bear zone by then anyway.
Yeah.
But that's something to also look for on support going forward. So I like it. We're back in long again on gold. Silver. On the daily here, the daily hit our target at the 200%, and it's the same kind of scenario. Took profit, but then it went higher. But at the end of the day today, and we got 4.5 hours left on this.
Yeah.
That would be the third settle above that level. So if you want to get back in on this, the correction back to this point is there. So if we get that third settle, and it has to settle above 86.89, if that happens, then that would be a buy with a target of 103.87. So keep an eye out for that too. Given that we're still in the bull zone, everything's getting definitely overdone. So be careful of that. What I typically do on setups like this, when you get a long run and you broke your 200%. And we get 3 settles back above it, I usually buy half of what I normally would. And then if it drops back down to the shallow fib here on a big correction, I'll buy the other half and dollar cost average it because my stop would be 3 settles underneath this. Even if it went into the bear zone, we got to have 3 settles under this 70.45 to bring it back to the bears. So if I'll buy half of it here and then buy half if it wants to correct back. Dollar cost average, but the target at 103 would still be the same even for both buys. So we'll have to kind of see what happens there. See if we can get that third settle on silver at the end of the day. And of course, if you want to get it before the weekend and it looks like it's getting ready to go and it's still above it, you buy it before the close. Or if you have a broker that does market on close or anything like that, you can different ways of getting it. But I'm just saying, you won't be able to get it after that because it goes into the weekend, and these markets aren't open on the weekend. So so you got to play that and take that risk also. I don't normally take futures over the weekend, so that's also a personal thing for me. I don't. Sometimes I do, but a lot of times I don't like to take futures contracts over the weekend if I can't help it. Like on this gold that I just bought today, I'm going to trade out of that sometime today. I'm not going to hold that. I'm not going to hold that into the weekend, even though it looks good. I'm just not going to take that risk. You could wake up and this thing could be down here tomorrow on Monday, and that would be ugly on a leverage.
What was that target there that you hit on silver? What was that 200% target that you hit?
86.89.
Okay, that's pretty close. Yeah, we had a target of 91,875. So just a few dollars above that. Yeah, man.
Yeah,
so
and you got it though, didn't you? Yeah, you hit it.
Yeah, we just got to barely reach there, but I like that. Yeah.
No, that's awesome.
My thought is, if it's going up here, we've got targets of 100 and then 105 are kind of our next, if it's going to go up.
Yeah,
but like you said, it's pretty overextended right now.
Yeah. And be cautious. So that could be an ugly weekend, or you can come Monday and it's up 50%. Who knows what the hell is going to happen?
This market's so crazy. We kind of waltzed on into Venezuela, sat down, had some tea, left, came back, and on Monday the markets were like, oh, I guess we'll just go ahead and go up on that, and Jerome Powell comes out with his little thing about, oh, the DOJ is coming after me, and the market's like, oh, hey, great news, we'll go up some more. It's like nothing. The Teflon market, man, nothing sticks, right?
Yep. And come Monday, we could actually own 3 more countries. Who knows?
Exactly.
We might have Denmark and Greenland, and who knows what by the end of the.
We'll throw our friends there, the Snow Mexicans in Canada. We'll throw them in together.
Yeah, throw them in too. What the hell? That's what I'm talking about, is being careful on these weekends because you have no idea what's happening right now. when it comes to all the geopolitical crap that's
Exactly.
going on.
Yeah.
All right. But again, that goes to my name. No narratives, all levels.
Right. Exactly.
All right. Going on to SPY. I haven't been in SPY in a while because I've been waiting for a bull zone. And the interesting thing is yes, and if you look at lower time frames and trade, lower time frames and stuff, I'm sure you're making good money in here. But I've been waiting for either a drop back down to the 200% down here or a new bull zone. Even though it rallied up, did not make a new high here, it did not break into the bull zone for me. So I've just been on a waiting pattern here on the 4 hour. So not much going on there. But then when you go to the daily is doing the same thing. Yes, we've made new highs, but I haven't broke. It's weird because I haven't broke this
Oh man,
bull
it's up
zone yet.
against it.
Yeah, and the thing is, if you look at my fibs, it's that fib extension that's always that last line of defense, and it's touching it, and it didn't want to break it just yet. Now the bulls are still in control a little bit on the internal momentum, not a lot because the ADX is pretty low at 14, so that means just more consolidation likely, with an edge to the upside. But I've been waiting for a bull zone to get back long, and until then, I just wait for downside targets until then. So, but this is kind of interesting to me on why that hasn't broken into the bull zone yet. Are we kind of topping out for a little bit and looking for a nice correction?
Or you might just get that strong thrust up through it, right? I mean, you get that consolidation up there toward the top.
Yep. And if that happens, I'll be back long again and going for a 72.43 target. We'll see.
Yeah, I like that.
Yeah. All right. That's what I got for all of those. Going on to these are just other ones that Chris and I were talking about, and I'm just going to look at them. MSTR strategy. Went into the bull zone. Oh, let me fix this here. Yeah, we moved up a little bit there. Went into the bull zone. Was definitely a buy, or not a buy. Take that back. It depends on how you're playing this. If you want to play just this range right in here, then it's a buy. If you want it as a buy on threshold theory, you got to wait until 219 up here, which is way up there. So there's some cases when things drop so hard like this, threshold theory is not probably the best one to use. You'll have to use other programs and other ways of looking at things. But you can take little things like, okay, we did hit the bull zone. We are showing some momentum for the bulls. We did break a trend line here, and the trend line break actually matches the shallow fib. So you could actually play this as a bullish correction in a bearish market based on the structure that I have here on the 4 hour. So broke out, and then it came back down. So you either you could have either bought the breakout right here, so you'd be buying pretty much where the shallow fib is at the moment. So you'd be underwater a little bit, but it's back here testing the shallow or the trend line here. So a breakout and a retest of that, still being in the bull zone with bulls behind it, is a good sign for us to start heading back up to take that. So if you are playing this is a buy in here with the target at the shallow fib as resistance. And then again, if it gets back above that with 3 settles above it, then you get back long and looking at other targets above. So I like the earliness of this. So if you want to front run the threshold theory, that would make sense. It all depends on how you approach markets. But if you're playing a trend line break, this is pretty much textbook so far on that break and the retest. The throwback to the trend line is big, and then we're getting some buying interest off of that so far with the tick up on this last candle, holding the bull zone pretty nicely. So that's on MSTR on the 4 hour. Now I don't know what it looks like on the daily. Let me see. Might be pretty ugly. Let me see here.
Nah, man, I like the daily. That pullback we had today, it hit the bouncing right there at the monthly pivot. So today's pullback, the daily candle, that low tagged the monthly pivot there. I like it.
Oh, sweet. Yeah. For me, I got a little bit more room to go before I get into the bulls. Yeah. But again, like I said, threshold theory moves like this. Threshold theory is probably not the best program to use, and that's why you would want to use like other things like pivots and stuff that you use. And So you can get like a little bit more of a shorter time frame and look for time entry points at different levels. So for me, I wouldn't even be looking at this. And since this is in the bear zone on the daily and the 4 hours breaking into the bull zone, that's why I would like playing just this area. But a move from 172 to 219 would be freaking nice.
Would be very nice.
Which would be, I can't think of that in the top of my head, so I'm going to use this real quick. So if you bought right in here and it gets up to the target, yeah, you're looking at a 22%. Yeah, I'll take that any day. So that's it for MSTR. Chris asked me for IWM. I haven't looked at the Russell in a while, but it went into the bull zone. I just did this morning, just checking it out. Went into the bull zone, set up the fibs. The fibs actually start right here based on the ADX, and we're working our way to the upside. So the previous shallow fib was right here. And then, of course, going into the bull zone, it would have been a market order as soon as you went back into the bull zone right here. So you probably would have bought around 22.55. And then the first target would have been right in this area between 261 and 263. We're looking at, I like to highlight it so you can kind of see where it's at coming across here. So it came up, tested, and then broke out. So the target would have been in here. So you would have bought, sold, then you would be buying again after the third settle in another 33 minutes, to be honest. This will be the third settle above it. So you'd be buying again, and then the target up here at 270 is coming into play there. So I don't follow this one, but Chris asked me to look at it, and that's what I'm looking at. The other nice thing is this trend line break over here went up really nicely and hit his target right here too before heading out. Yeah, what were you to say?
Yeah, no, let me pull up my chart here real quick. There's a reason why I wanted to do that. And part of the reason was to help them understand what we're looking for as far as markets go, right? So let me kind of pull this.
Oh, yeah, just alts in general kind of thing.
Yeah, well, so, the idea that we're getting, it's this idea that we're getting this rotation out of the mega caps and the Mag 7, which has pretty much dominated market for the last 2 years. But we're just getting a rotation, right? We're not actually, money isn't leaving the market, right? So it's rotating in a really good way into the small caps. All of a sudden everybody remembers there's 2,000 small companies out there, that they can invest in as well. And so those that have been following me since at least back here around October of 23, you might remember here on this show and a few other places, I said that we were looking for a dip below, a sweep of this low here of this local range to print a spring, and then the target at the top of the range. And of course we got that. And then people started freaking out once we got there, started pulling back. And on the show, they were like, oh man, it's done. It faked out like here, it's going down. I said, no, we're coming new all-time highs again. And sure enough, here we are. But this is the important thing, because the IWM now, yesterday was 10 days in a row that it's outperformed the S&P. And that's a pretty significant record. That doesn't normally happen. And today, it continues to fire up here higher. And as you were showing on your S&P, it was still just kind of pulled back, right? So I think we'll get at least an 11th day in a row here. But this is really good, guys. This is what you want to see. If you're worried about overall markets being topped out and whatever, this is saying they aren't. And if we're getting this move in the small caps like this, and it's saying that the markets aren't topped out, I'm hard pressed to agree that Bitcoin's top is in. Now, it doesn't mean I'm right. But again, we look at the wealth of information that's out there and the things that normally happen. And I mean, right now you got to be thinking longer term, long for I think for the markets just in general with it. So that's why I kind of wanted to bring this one out there.
What's your next target above there?
Overall, I've got targets of 305 and 325 and a quarter. We could see a push up here toward this 279 and then a pull back down toward, 240 here, 245. Okay. We could see something like that on the way, but ultimately, or even a little bit lower here at 238 or so.
Yeah,
but
I know you're looking at a weekly, so that's why I was just curious.
Yeah. But ultimately, I've got those, I've got these larger targets out here overall. This was, everybody pay attention. This was how long of consolidation here? This was
a long time.
Yeah, I mean, you can't really count until here when it breaks out. You're talking about 1,500 days almost. So we should expect a strong breakout and some continued upside on something like that. That's most often what happens. You know, the longer you consolidate, the longer you go sideways, the harder and bigger the breakout usually is. So I just kind of wanted to toss that up there to give people hopefully a bigger idea about understanding what's going on with the markets overall beyond just the price levels that you and I look like. Because they come and they listen to us, and sometimes they still want to hear some sort of narrative. Well, that's the narrative worth listening to. That's a historically proven thing. But again, nothing's guaranteed 100%, which is why proper risk management is so stinking important.
Yeah, for sure.
So
yeah, no, the reason I was asking was, I have the 270 target on here, and this is the 4 hour, so definitely different look. But if I take the trend-based extension off of this move here down to this point, I got a 275 up here also.
And that's pretty close. That's pretty close to the yearly R1 pivots at 279 that I was talking about. We might get there and get a pullback before we finish up higher. So yeah, I like that.
Yeah. So if you get really 270 or 275, anywhere in that range, I would be looking to take profit, getting that third buy here in 28 minutes.
It's 28 minutes.
28.
He says, "Listen, guys, it's in 28 minutes. We're going to be here."
Well, that's what it said. When the candle closes, gives us that third settle, man.
There you go. There you go. I know. I just love that it was like the 28 minutes. It was so exact.
Well, it'll be 27 minutes here in a minute. No, I'm just kidding. All right. Couple other ones that I was asked to look at. One of them is Robinhood. So far, still bear zone on this one. We had the bull zone back here, put the fibs in, this 100% hit right here. And so far that hasn't broke. So like if you were actually in this, you could be long at this point. So once it's went into the bear zone, this would be the first line to buy. Did not have three settles. Kind of had this little bit of a buying action on this candle.
Yeah.
To give us almost probably pretty much could be bottoming. Who knows? But then it popped back up. Did not get back into the bull zone. So it was a nice correction, but not a newer high. So still working our way to the downside. So for me, the way I would play this is this target down here inside the fib extension zone between 92 and 98. The target I have is right around 97 or 95.66 on this target. So I'm either going to be looking to buy down here or a new bull zone. So this one's a little bit bearish for me at the moment. And then again, this level would be pretty key in here if you got bought in here, because a break of the 92 level, which is pretty close to this low right in here, a break of this would bring in much, much lower pricing. You're going to get into an area of very little support. So really buying this, if you bought here and it dips down into this, you could always buy a little bit more, dollar cost average it, but stop it out if it gets below that 92, because that could get pretty ugly. But a little bit of bearishness on Robinhood. PLTR, our good old Anopticon. The bear zone on this one too. Went into bear zone, tried to pop up, and didn't get into the bull zone. It definitely tried. And again, when it popped up, it got right into that first line of defense, found some sellers, and the first line of defense in between the fib extensions, between 185 and 187, went up there, found some selling interest, and kept us on this bear trend to the downside. Same kind of thing that we just saw. There is a this level right in here, which would have been bought if you wanted to get in early, would be right here. But for me, a lot of these times, I like in bear zones, I like to buy at least the 200% extension or a new bull zone, unless of course it looks like things are going to kind of turn around here. But again, you're getting a little overdone. This could be a good spot to get in if you are in at this level. A good stop possibly could be right in here underneath the 167.75. If we get three settles underneath that, that would open up that 154 It just depends on how you want to play it. But it's got a little edge to the downside here on this one on the 4 hour. It depends. A lot of times I'll look at 4 hours because those are the ones I'm going to be trading. And sometimes I'll look at the dailies. It just depends. I'll look at the daily sometime to see is the daily in a bear zone or a bull zone, which I don't even have worked up. But the 4 hour is still easing to the downside there. Now let's go on to some of the miners. This one's yeah, it just went into the bull zone. So it was here's the shallow fib at 42.93 or the previous, which you can see had already 3 settles above it. So once we went into the bull zone right here, you would have been buying and you would have been long, probably right around 53. Oh, I can move this up. Moving the fibs, baby. There we go.
Yeah.
So the shallow fib here is at 52.87. So if this drops back down to the 52.87, you'd buy again and press the position. But for the buy that we have so far, the fib extension here has a target at 58 or 68.30 on that target there, which falls inside the 65.28 to 68.85. There's a nice little area in there at 68.30 that would be the target for that. So breaking into the bull zone, getting some bull momentum behind it, getting back above 20. That's the first thing I'd like to see. I'd like to see it get back above 25. That'd be really nice.
Yeah.
But the day over day movement as the price went up and broke this into the bull zone on a positive is a good signal. So I like that. So I like the movement of getting up to those take profit targets. So Iron was a buy and looking pretty good. CLSK also a buy.
Yeah.
Yeah. We went into a bull zone here. Had to set the fibs way back here because we actually crossed the bull right here, but the low momentum really didn't get us out of this zone until here. And then when you set the fibs up, I mean, you would have bought right away. So you've been buying right in this point, which is pretty close to the shallow fib, right around 13 or so. And that's where you'd be. Went dipped down a little bit to the 61.8% level and has popped so far. But bull zone, momentum behind it. Next target's inside the fib extension level between 1488 and 1542. I just got it right there about 1502 on these highs in here, which fits nicely in there. So that would be the first profit. And of course, if this pops up, makes a new high up into this point, the shallow fib would be about 1390. You'd buy on a dip and then go up to the 200% and stair step it on the way up. But that's where we're at the moment on that one. So that one's looking pretty good. If you go to Cypher, Cypher went into the bull zone, came back down, tested the 100%. Not a lot of momentum on this one. This is still looking a little bit more consolidated, but the bulls are in control. But you never know; it could be an early sign of us kicking back up here. But if you did buy this one, you would have been, you probably wouldn't have been doing anything here because you would have been buying pretty close to where the target was here. Dipped down, gave you a little bit of sweat, came back up, and so far it's been in this range. And then so far we're popping. So if you did buy and sweated, you're back in the money. And 2045 is the target on the 200% off the previous shallow fib or the previous bear zone. So that would be the target there. Now, if it gets above that, you'd have to set like this 200%. You'd have to set. Let's see I'm just going to eyeball it real quick. But then you would put it in here like this, and then this level right here most likely is going to be a spot to look at. So the bottom of that zone might be able to look at this level here, but somewhere inside that zone in here would be a target somewhere in there. And then of course the 200% would be after the target was hit there. So yeah. That one's looking good too. So we're getting a lot of these are looking pretty good. And that's on the 4 hour. So I was looking at the daily on this one too, because this one's just about to click into the daily. So if we got almost 3 hours to go, but if this settles, if this gets back into the bull zone here, that's going to help this position a lot because that's going to bring a lot more buying interest. And this would also be a buy with a, I mean, the early target's 2065. You probably wouldn't be doing that. And that's where you would have to move this. You'd have to do it like this. Get the high here down to the low, and then you'd be looking back in here as the next target, and then the 200% there. But either way, we'll have to wait to see if this gets into the bull zone on the close tonight. Not quite 20 on the ADX, but it's increasing. So this could be an early sign. Get into the bull zone. We'll start rocking and rolling.
I like that setup, man.
Yeah, I do too. I kind of like it a lot. And then the last one I have was Riot.
Shoot, look at it.
New bull zone. Bull zone hit was a buy right there. First target. Basically, if you bought right there, you would have already been selling in this, and then buying it back. Or if you want to be a little bit more aggressive, the 200% is the target up there at 22.21. So if you are long and you're holding that up to that point, you can, or sell it there and then buy on a dip at 17.47. Just depends on your risk tolerance. If you're a little bit more conservative or aggressive. Conservative people are going to take that little bit of profit and then look for a buy back at the shallow fib. Or if you take the profit here, three settles above 1923 would open that up. But it could also open up a lot higher than that too. But we'll have to kind of see how that plays out. Not really the best trend lines in the world, but there is this one possibly. I wouldn't put a lot of faith in this one, but just curious of where this one would end up. Let's see. Yeah, pretty much this range. So this is where you probably should take some profit off of that move. But again, if you're aggressive, you got the 200% up there. So that's where we're at.
And neither one is wrong necessarily, right?
No, not at all.
You got to figure out. Listen, guys, you have to figure out who you are as traders or investors out there. You have to understand what is your real risk tolerance level. I am more risk adverse, generally speaking. So I don't tend to take, even if it's looking decent, a lot of times I won't take on more risk. It's just, that's not who I am, right? And that allows me to sleep at night. It's when you're risk adverse, but you try to take on a lot more risk. That's when your emotions start coming out. You start freaking out. You don't follow your rules. You don't follow your system. You trade emotionally, and that gets you hurt. So Fibbo's saying, listen, well, here's the target, but hey, listen, it could go up the other one. And if you're more risk tolerant, you might be willing to hold on for that. Yep. And that's perfectly good. Neither one is wrong or right. It's just you have to understand who you are as the trader investor, before you're getting into these trades. So that way you're not putting extra stress on yourself that's going to cause you, most likely to screw up your trade that you have set up.
Yeah. And being a little bit more conservative in my trading, we're probably a little bit similar on that. What I would probably do is once it broke up into this range like this, I'd probably just put a stop on it at 1851. So if it does rally on out, then I'll be happy. But then again, if you're in this range and you're trying to get a little bit more out of it and it ends up breaking back, then you just get stopped out for profit and then you just move on. You could do it that way too, to where you can bring in a little bit more aggressiveness, but then again, be conservative too. So there's different ways of playing it, but that's how I typically attack it. If I'm in a range and I'm not quite to the level I'd like to see, I either go to the market and just take the cash, or I'll set that stop and then just see if it wants to blow on out. And if it does, hooray, we both win. So there's different ways of playing it. I'm just giving examples of.
Well, I think that's one of the, if I can toot our own horn here a little bit, I think it's one of the other things that we do really well there at TWC, yourself and me, is that we don't just say, listen, here's the system, here's how it works with whatever we're teaching. Yeah. We come back, we say, listen, that's how it works. Yeah, but how do you actually approach the market? What might you do? How might you approach this versus, you trying to figure it out on your own? And, I do a lot of that when we do our trainings, getting people to understand, proper placement and why, a loss may not be, with what I teach, why one of those small losses may not necessarily be, a bad thing, and why many times it can lead to a much better trade that you make a lot more money, even when you subtract the small loss on it. Trying to get people out of that mindset that, oh my God, I'm going to lose. Because isn't that the issue they have, Fibbo? Like, they'll get into a trade and they'll be so scared to lose money that they'll just do things that they wouldn't do if they weren't worried about that, right?
Oh yeah, no, I see that all the time, and that's probably one of the toughest parts. Is when you put on a trade and then it starts to eat you a little bit. You have to be willing to take that risk, or you could really never trade, because you're never going to, not never, it's not going to happen all the time that you buy into a trade and it goes automatically into profit for you. It's going to be more everything's in ranges and not exact. Basically, it kind of comes back to what we were saying earlier. A lot of people out there talking absolutes, like it should do this, or it has to do this, or this target it has to hit this, or
it's
the
going
market
to
has
do
to
it,
do.
right?
The market doesn't have to do shit, and the market will do whatever in hell it wants, way beyond what we think it's going to do, and that's why you got to have levels and ins and outs and risk management, because that's the key. But I like what you're saying, because I have a threshold theory that's probably 90% of my guide of what I should do. But then again, there's many multiple ways you can attack it based on the system that you have. You could take a profit right now on this one at Riot. You could take profit right now, or you could take a stop at 1851 and it gets stopped out, or you don't get stopped out and you make another 5% because it rallies up. But it's still threshold theory. It's just on how you're attacking the exit point. There are exit points, and yes, you should get out at the exit points, but there are different ways to approach it. And that really comes down to risk tolerance. Are you conservative, moderate, aggressive type thinker? All of that comes into play. And it should come into play, because if you set yourself up and you know yourself, then it takes the emotion out. And that's really what you want. It's when that emotion starts, like you said, you get into trades and then you're taking on more risk than what you normally take. Then your body is like something's off, because, and then all of a sudden you're going to be like, okay, how do we fix this? So that kind of stuff. So again, that takes a lot of practice, and just, it's just a lot of practice, and just like anything else in the world.
Yeah, exactly. And for both of us, it's years of experience, right? It's years. What's experience? Experience is just doing the wrong thing enough times to figure out you're doing the wrong thing, and then figure out how to do the right thing, right? I mean,
boom, exactly.
That's really all it is. And there's, and for people that come in when they're trying to trade, right? Whether they come to TWC and threshold theory and all this stuff, the reality of it is it's not going to happen overnight. Now, we're going to have the ability to get you there a lot quicker than what you're going to get on your own. I was doing some research last week, and it said that you have a 1 to 5% chance as a solo trader learning to become profitable, consistently profitable, which means through regime changes over time, and whatnot, where you're actually making money. That is significantly low. As a matter of fact, I also found out that you have that only 20 to 30% of institutional traders that go through the institutional training, that go through like legit prop desk, where they work for the prop desk, those types of trainings, 20 to 30% end up becoming to the point where they can be trusted to make money over time, right?
Yeah.
And it's not that people can't do it. It's that the people don't understand that, and they don't know what they have to do because they're new. You don't know what you don't know when you get in there.
Yeah, no, I'm with you on that. And the thing is like, when you're talking that 1 to 5%, take anything in life. I go and buy a set of golf clubs, and I learn golf on my own. Do you think I'm going to hit the PGA? Maybe.
You might hit somebody in the PGA.
I might have a 1 to 5% chance of making the PGA, learning on my own, but very unlikely. So what am I going to have to do? I'm going to have to find a mentor, a trainer, people that will give me the ins and outs of what I should do, polish my swing, polish my mental game. It's all the same. No matter what you pick in life, it's the same. Even with trading, you gotta do the same thing. Yes, you can go out and learn yourself and try to figure things out on your own, but you can make it 1 to 5%, or you can get some mentorship and try to figure out like what your risk tolerance is and what emotions kick in when things happen with you and blah blah blah. And so you can take anything in life. And I'm so surprised that people don't look at trading the same way. Like it takes practice, just like anything else in the world. It's just not something. Now, there's going to be gifted people that know things and, pick up golf clubs and they're a freaking savant and they're out there on the PGA going, yeah, I taught myself.
But what are the odds it's going to be you, right? I mean, we have to be honest with ourselves, right?
Yeah,
I mean, I didn't. I've had multiple mentors throughout the years. I've paid untold amount of money throughout the years to learn. And some of the things I paid for, I learned didn't work for me. And that's part of the learning process as well, right? The other thing to think about, I think, whether you're coming to TWC and myself and Fib, or you're going somewhere else, is just understand that small bit of money you're paying may be for you to find out that you don't even, at the end of the day, that trading is not for you. A lot of people come into trading at the beginning and they think it's a certain way. And what I found over the last 30 years is we all pretty much think the same thing when we come in, but it's actually like completely opposite. And a lot of people decide, you know what? When it was what I thought it was, I was okay. I want to be in here. But now that I see what it's really like, I really don't. And that in itself that will save you ridiculous amounts of money, right? So I think there's a lot of different ways to think about it when you're coming in there into the market to trade and to learn to trade and to do all these things.
Yep. You'll find out real quickly that it's actually work. And people don't like the work.
Exactly, right? Exactly. And if you're profitable over time, it's boring. That's the way it should be.
Yeah. If you're doing it right, it's boring, unfortunately, but that's just the way it is. Exactly. But yeah, no, I'm with you on that. That makes complete sense.
Yeah, so
for sure.
We just, we try to do what we can. We're there to ask questions. If you're in TWC, guys, listen, we're not going to shy away from questions. We want you to ask questions. That's
actually, I have one. I was just reading the comments. Fibbo, do you review your strategy every month, week, or day? Every time a zone goes from bear to bull, I will do a historical look back. And make sure that's still the best fit zone. So I can't really say on a daily or weekly basis. It's really if the zones are changing on me, I want to make sure that my zones are still in play. So there is maintenance to this. It's not once the zones are established, they stay forever. Because psychology changes, markets change, people change.
Changes,
Yeah. So the psychology of the trading that goes into that certain asset could change dramatically, which could change the zones. But until then, I'm going to keep those zones because as long as those zones keep playing out and the structure is still there, I don't need to change them. But sometimes it'll change into a zone that just doesn't look right. And because I look at these indicators like a doctor looks at an EKG, it's like a heartbeat of the market. If you go back and all of a sudden you got something wrong with the EKG, you're going like, something's off. I'm going to have to go back and check. And if you go back and check, you can see what's off and fix it and then go on and move forward. That's kind of the way I approach it. So yeah, there's zones, but they could change really at any time. If a good zone's in play and you got a good market, the zones generally will stay for a while. But then, it could change in a couple months or a couple years. I would love to have them for a couple of years. Because if you got good zones that go for a long time, you're going to do okay.
Yeah, exactly.
At least I feel like I'm going to do okay, but we'll see. But
let's see if we have some more questions for you, man, before we jump out of here.
Yeah, no problem.
We'll give him a minute here. If anybody's got any more questions for Fibbo, shoot them out, or I guess me as well. I guess I could answer questions as well, but I'm here every week. Fibbo's here, tries to be here every other week, but life is what it is, and you can have crazy we're lucky we had him today. Crazy markets over there this morning.
Yeah, I'm all over the world when it comes to this stuff. And if anybody knows, the European gas markets kind of moved a little bit today. And when you're managing large clients, you get a lot of questions.
That was a nice
question. Yeah, because TTF and the MVP market, holy crap. But that's
ridiculous.
That's a whole different ballgame, which I'm going to go right back to a lot more of that work here as soon as I get off here.
Hey, Nick's got a question here. How do you like to allocate your percentages of what you dedicate to each market or time frame?
I mean, that just comes down to just the markets that I feel like I'm more of an expert in. I will put more money into those buckets. So that's really, I stick to the 4 hour and the daily on any assets that I mainly trade. And really, that's only like 5 or 6. Every once in a while, I'll throw out the alt trade or those kind of things. But I'll allocate a lot more capital to the 5 markets that I really trade. And right now, it's BTC, it's Ethereum, it's gold, it's silver, it's SPY. Those are my main ones, and I get a little bit of the world in there because I got the crypto, I got the alt, I got I got the hard metals, and then I got the S&P, which is just the general markets in general. So I kind of like that that mindset. That's just me, and then I just allocate the capital there. Now, individual stocks and alts, I'll have little buckets, but not much. Like I have a Tesla trade on right now that's in the water, and it's still a bull zone, but it still looks ugly. And I might lose it out, but those are small trades versus my 5 main trades. So I don't know if that answers the question or not, but that's the way I kind of approach it.
Well, I know
I keep my the amount of what I look at small. I don't get like 10 things to look at. I try to keep it small.
I think one of the biggest takeaways from what you just said there was you said, listen, I've got some things that I know well because I've been doing them a long time, and that's where I pretty much focus.
Yeah.
And I think that's one thing because, a lot of what we'll see in crypto Twitter and the rest of social media is everybody's like chasing everything, especially if they hear a big green candle already printed, right? They'll chase it. Guys,
don't do that.
You just have to focus. Just pick a few things to focus on and spend the majority of your time just trading that. And you can make a living and even better doing that. The more things you're chasing, the more diversified you get, the more this here, that there, whatever, the more likely you are to actually lose money. As Fibble was saying earlier, he says sometimes the zone gets on there and it just doesn't feel right because he's used to the way that particular market breathes, right? It's almost, it's a living thing, the way in which it does. And this is the stuff that you pick up when you focus on something. So, stop trying to focus on every single little thing that everybody's mentioning in crypto Twitter. Start focusing on a few of the big, heavily liquid things first and get your trading because that's going to be more forgiving. It's likely to hit where you want it to hit when you want to get out versus, going much further, right? Because there's no liquidity in it. You do that first and then maybe pick up something a little smaller along the way. But you can't just jump in there and do everything because you're going to lose everything.
And when I say an expert in something, like you said, you do get a feel for the market and you can see when things are breaking apart from what it normally does. But for me, when I look at those 5 or 6 things, those are the ones I've put a lot of time into to really zero in on those zones. So I got a lot, and it also gives me a lot more confidence that my analysis is there to back my stuff for those 5 main things. Not that I can't look at other things and do analysis on them, but I'm going to apply a lot more of my capital to the markets I am more comfortable in. Put it that way.
Yeah.
I mean, it's kind of hard to explain, but hopefully I'm.
I think you're explaining it perfectly, man.
I'm trying to keep it in simple words.
Yeah. We had one more question. I guess we got time for one more question before you go. Do you have a strategy you do when you day trade, or is it basically TT, threshold theory?
Yeah, I don't day trade at all. If I do, it's like on a Friday when I'm doing with gold today. It hit the bull zone. Being on a Friday into the weekend, those are the only day trades I'll do, but it's still based off of threshold theory. But the threshold theory is my personal way of doing things. I apply a whole bunch of different TA and different things for different markets when I help others, like my day job. Because like my day job doesn't really have this type of structure because I'm working with end users that have to use energy. So their whole mindset's different. It's still trading in a way, but it's not. So I just apply different thinking that way. I guess that's how you would answer that question, I guess.
You kind of got quieter there, kind of just hit the end there. I was just going to let you keep going to see how far you were going to go with that. But anyway, man, hey, listen, so glad to be able to have you again this week, man. I guess we'll try again, in 2 weeks?
Yeah. True.
Well, that was a long wait, man. You got me concerned now.
No, I looked over at a calendar date. I should be good.
Okay. All right. Well, so you hear that, guys. So we're going to try to do that. But if you want more Fibble, you can do it at TWC, guys. And, of course, you can get us over there as well. Like I said, use if you want to join the Liquidity Cartography group, you get access to everything Fibble and I both do over there. And you get 55% off that right now, very limited time on the monthly. So, shoot, just any of these trades that you or I have put out here in the last week would have easily paid that for a few months.
Oh, yeah, for sure.
And that's without the educational part. So,
yep.
We do what we can here, guys. At the end of the day, I mean, we're obviously going to talk big about what we do because we put a lot of effort into it. And we care about whether you do the right things you need to do. But at the end of the day, remember, no matter whether it's joining TWC or whether it's joining somebody else, you still got to put in the work. You still got to put in the effort. You still got to put in the time. I can't do it for you. Fibble can't do it for you. Anybody else can't do it for you. So keep that in mind. But if you are serious about learning, I think absolutely best place to be is with us. And we got some pretty great people over there in the group. So
people will love the community for sure.
Yeah. I always tell them.
If you don't like Chris and I, you'll at least like the community.
Do what now?
I said, if you don't like Chris or I, you'll like the community.
You'll love the community at least. Yeah, they're great people. We're kind of questionable. We're kind of sketchy a little bit, but the community is a bunch of great people. So, all right. Hey, listen, we're going to get out of here. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. Do me a favor, hit the thumbs, hit the like, hit the, share button. We'd love if you guys would share this for us and kind of get our information, these charts out there more. And other than that, I'll be back next Wednesday. Beards and Bitcoin, guys, with Andrew and Tillman from Arch Public. Fibaswani will probably be in the audience there. He usually is.
I like giving you guys shit during that show. I love the show. Don't get me wrong. I just like messing with you guys.
Oh, I know. And then, of course, next Friday, I'll be back, guys, with the market breakdown. So y'all be great. Have a great time. But, be serious about trading. Be serious about your risk management. And I tell you, Phil and I are both here to tell you it can provide a pretty freaking wonderful life if you do it right. So just decide if you want to do it right. If you don't want to, that's fine. But at least figure it out now before you lose a whole bunch of money in the market, right?
Yep. I mean, that's just the way it goes. I mean, trading's not for everybody. I mean, that's everything in life. I mean,
exactly.
Ballet is not in my cards. I'm not going to be a ballet guy. So,
well, I got that video I'm going to share online here soon about you in the leotard there in ballet. All right.
Yeah, let's not
saying it's AI, but
no, 100% AI if that happens. You heard it here now. If you see any of that, I have never worn a tutu or anything in my life. If it shows up, it's AI. You heard it right here.
There you go, guys. All right. Hey, listen, we hope to see you guys at TWC, but if not, be sure to join us back. Follow us online, Fibaswani, at Fiboswani, just like you got spelled there. You can follow me at TX West Capital on X there. Y'all take care. We'll see you next time. Goodbye, everybody.
All right. Peace.
Trading tip: always manage risk before chasing gains.